Dzień dobry. Good morning. This is where I switch to English. But maybe first taking the opportunity to say thank you to the ladies who are translating in the back. That's a tough job, and you did an excellent job so far, so thank you. Thank you also to Jan. Thank you for inviting me. You don't give up. But it's my pleasure to be here today, and also thank you to my colleagues in the Supervisory Authority, KNF here. It's a pleasure to meet Christian, but of course Damien and I prepped together for this meeting, and as such it feels also that I'm really visiting a good friend, because particularly in the EIOPA board we try to work together as supervisors, and in my role as the chairperson of EIOPA, I try to talk to the representatives of industries, and this is a big market. Poland is a big country, a big market, and I think always a very constructive player at my table, having a European mindset, and at the same time also ensuring that the table, myself and 27 supervisors, understands what is important for the specificities of the Polish market. And it is in that way that it's for me excellent to be here this morning, even enjoy a walk by the sea. Coming from a sea country, that was a lovely start. But also, let's talk a bit about insurance and my perspective on the Polish insurance sector, but particularly in the EU. In my speech, I will focus on EIOPA, I will focus on a European perspective, but I will relate a bit to Poland as well. As a European supervisory community, we are devoting a lot of efforts, of course, to enhancing supervisory convergence. Important, but not completed, and I think we can all concur. Heterogeneous approaches still persist in the implementation of many supervisory practices and the use of tools, including but not limited to cross-border supervision. Now, we continue to aim for consistent supervisory practices across European countries, and we do so by exchanging, and in that learning, actually, choosing good practices to continue with, and thereby build a common interpretation of laws and regulations in Europe, including on Solvency II. We also build trust. We build trust in shared data and other supervisory information, which is essential to understand what is happening in your market at a time that also players can be active out of other member states on the basis of a passport. This development of a supervisory culture is instrumental for supervisory convergence and for ensuring that supervisors have a shared understanding of practices and behaviors of the players in our market. Now, look at that from a European perspective. In which area is it crucial to work on convergence? Where do we see most problems? And I give you some figures. Cross-market, cross-border business plays a fundamental role in the European economic area, and already 11% of gross written premium is written cross-border. And there is a growth in that model. We see diminishing of groups with subsidiaries. We see a growth in home-host relationships, where it makes sense, particularly in a digital time, to have a license in one member state and then sell throughout the EU. With businesses operating cross-border, an effective and consistent supervision of that activity is key to ensure the similar level of consumer protection as well as trust, irrespective of where the consumer is. And there's much more to this, but I will touch on that a bit later. What we see is that there is an importance of maintaining high quality, effective and consistent supervision, and particularly when it comes to insurance-based investment products, and therefore we raise the topic of value for money. And we actually raise the topic of concerns about value for money. Value for money being that consumers receive a fair value for what they have been offered. And what they have been offered is a service, a product, that comes at a cost, but it also gives a return. And we see in cases where some products that are sold cross-border, and particularly in the unit-linked business, that are a lot more expensive when they're sold outside of the country where the company is licensed than when they are sold inside the country where the company is licensed. That is interesting. And it persists in many EU countries, also in Poland. Eurobarometer figures show that in Poland, at the moment, 35% of your population believes that IBIPs, insurance-based investment products, do not offer value for money. Now, with that, you are not doing worse than the average of Europe. So I think there is, in general, across Europe, a bit of hesitation among the population. But still, a third of your population thinking they're not receiving value for money, I think is a signal that more can be done. And in that context, we very much welcome the swift action of KNF, of the Polish Supervisory Authority, in 2021, a step that I think is crucial to ensure that consumers do receive value for money. But because it is so widespread, value for money, we've been working on that since 2020. We issued supervisory statements, we developed a methodology how to assess value for money, and we are currently working on benchmarks to also assist national competent authorities, that means the individual supervisors, including KNF, in the supervision of these requirements. And here again, also thank you to not only the Polish supervisor, but also to you as the market for participation in when we have consultations, when we look at thematic platforms, the contributions you make by data sharing. It is very helpful, and a lot of the feedback is constructive, and it helps us to build this framework in a way that it can be meaningful. And while we continue to work on this benchmarks as supervisors, at the same time, as we all know, there is a discussion on the retail investment strategy happening in Brussels. And this could also strengthen value for money provisions in the level 1 text. Now, I must say that following the developments in the last couple of months, I do have some concerns. And mostly what I find remarkable is that apparently, if you follow the debate on the retail investment strategy, it sounds that everything is so focused on keeping everything as national as possible, as if there is no internal market, as if passporting doesn't exist, as if there is no real ambition actually to build a single market. And that to me is concerning, for at the same time, strengthening the competitiveness of the EU really is essential if we want to stay in the role we currently have. And I cannot match the debate on the retail investment strategy currently, and the tone that is very national and very no change focused, with the need to really make our single market thrive in order to stay competitive. EIOPA promotes convergence through supervisory convergence tools, but we also do so through oversight activities and by using supervisory powers. However, based on our experience, existing legal powers and tools that EIOPA have are not always sufficient to address issues, and particularly to address issues in a timely manner. For instance, cooperation platforms, they work very well to exchange information, but they also very much depend on the activity of the supervisors in it, and they actually become less efficient in case of joint interventions or when we need to take joint enforcement measures. Then there's many national specificities, differences in concerns that could actually lead to a slower process. Initiations of joint on-site inspections are, I think, very important, and EIOPA's participations in such inspections and the follow-up, particularly of conclusions, they're highly dependent on the willingness of the NCAs to actually act rapidly and do so effectively. Recommendations are not binding on the NCAs concerned, but thereby they cannot directly address consumer detriment unless NCAs decide to tackle the issue in the recommendation. If an NCA gets a recommendation from EIOPA, and here I stress that a recommendation from EIOPA is not something that I do sign it, but I don't decide on that on my own. I decide with 27 heads of supervision. This is a joint supervisory decision. So if that joint group of 27 supervisors in the EU, together with myself, feel that something should stop because it's bad, It doesn't mean it has to, because if then the home country does not act, then that is it, and we need to see what to do next. We have steps to do next. We can do a breach of union law, we can inform the Commission, but in that time that we are doing that, product is sold, consumer detriment is happening. And this leads me to the other topic that I wanted to discuss with you today, and that is, do the changes in the Solvency II directive, in the review, will they help to address this? And here I can say that some changes in the Solvency text will give some improvement. They will improve information exchange between home and host supervisors, very important. They will also introduce new rules around joint inspections with an obligation actually for the host NCA to invite EIOPA. And it also involves to issue binding recommendations. Binding recommendations really is a step forward. However, and this is relevant, we can only do it in the case where there is a likely non-compliance with MCR or SCR. So if there is a concern about a product being sold that is really bad, but solvency is good, this is not valid. The new Solvency II text also gives EIOPA a broader mediation role in information exchanges and in cooperation platform, but again with conditions. And in this context, there has to be serious concern about a negative impact on policyholders or an indication of serious deficiencies in the insurance undertaking. My point here is that sometimes, by the time we have actually identified that there is a serious deficiency that is currently impacting policyholders and we can start to act, a lot of damage is already done. A lot of damage is already done. Moreover, and this is important, and I want to emphasize that, if then we start and we have findings as a supervisory community and we really feel something has to stop, we really depend on the willingness of the home to act. So outcomes of these processes depend heavily on the capacity of supervisors and the commitment to work together. So hence in cases where home NCAs do not act conclusively towards a company or a host NCAs do not coordinate actions efficiently, this is the moment where I would say it would be helpful that there is a European supervisory community that can stronger intervene and maybe in that case even should have the same powers as a national supervisor. It's an extreme situation, but I believe that simply the fact that that situation is possible will limit the moments that this will actually happen. So addressing cross-border issues, I think, is crucial also against the background of a capital markets union. I think as an insurance industry, in a time where more and more risks are, first of all, visible in society, but also on the rise, with therefore a much more interest in insurance, also in the capitals of our home countries, I think it's essential to also be conscious of that role, but do that so in the context of a single market. More cross-border activities can deepen the EU internal market by providing consumers with a wider range of investment opportunities for savings and pensions. Increasing cross-border retail investment is a key element to complete capital markets union. And in order to foster retail participation, trust is essential. A consumer should just buy the insurance and feel that if I need it, it will pay out. It should be irrelevant for the consumer whether or not he or she bought that product from an insurer that is licensed in the country he or she lives or a country elsewhere in Europe. So this was the focus of what I wanted to share with you today for my 15 minutes. I would like to say that supervisory convergence in Europe is key. It's key to ensure a high level of consumer protection, and it starts with consumer trust, and it has to be across borders. EIOPA has been promoting this convergence of supervisory practice, and we will continue to do so. We've also been addressing consumer detriment. We will continue to do so. And a very good angle to do so is value for money, because it starts at the value and for money that a consumer gets when it buys a product. So for now, I've been able to do that in a very pleasant way together with my 27 supervisors, including KNF, but also with the help of you, of all the stakeholders who give us feedback, who flag what we need to do going forward to make it meaningful, implementable, doable, efficient, but at the same time benefiting consumers and financial stability. Let's continue to do that. There's, as I said, a lot to be done, but I trust that if we do that together, we can really make some steps. So thank you very much, and I'll stop here.